Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. Okay, so looking at the recent bearish action, we can see it all started from the failed follow-through higher to both a weekly key reversal up in mid-April and a daily key reversal up on the 19th of April, which also turned out to be an indecisive doji cross right at the top of the recent market. Things then became interesting as we could look at the whole action from the heights of March all the way down until 4 weeks ago as a large bearish halfway hesitation, with a potential target X below in the 2030 area. It was one of the most gratifying moments in recent times to see prices drop down to reach target X and immediately shoot back up again. The subsequent juddering rise pushed up through. Now, these are in no particular order. Okay, the congestion at 21.32 to 35, the extension of the lower trend line for the May to June 2021 descending triangle, currently at 21.47, the middle time currently at 19.90 of the March to April bearish shift pitchfork, and pushed up through but did not close over the 50% Fibonacci line of the June-October 2018 move at 22.21. 2,221. It was a combination of this 50% Fibonacci line and the upper time, currently at 222.60, of the March to April bearish shift pitch where they capped this rise, and we saw prices drop down. So we are now currently within a fairly free area between the previously mentioned 50% Fibonacci line overhead and target X below, the old target X. This recent move up and then back down has validated the bearish shift pitchfork, or at least a downtrend that is coincident with it. And that's with the upper time. So what's next? Well, I'd like to reprise two separate and somewhat lagging indicators. They are: one, the dead cross of the short medium moving average, currently at 22.59, dropping down through the slowly declining medium moving average, currently at 22.86. And also the short medium moving average, dropping down through the long moving average, currently 22.83. The special reason to reprise these two is that these lagging indicators may be joined shortly by a third, more powerful one, the medium moving average moving down through the long moving average. The only issue is that whilst the medium moving average is moving clearly lower, the long moving average is prone to sideways actions. Thus, to make it a legitimate dead cross, we would need both moving averages to be heading lower, ideally. This brings me to potential patterns, and we may have one of these two. Either another bearish halfway hesitation, much as we've seen in March and April, or a possible bullish double bottom. It is too early to say which, but it is worth noting for the future. Whilst we are waiting, I'd like to further nurture an idea I planted in your mind 3 weeks ago, and have repeated it ever since. It is to regard the whole action of 2022 so far, even perhaps going back to November last year, as a possible diamond pattern. This idea is still way too early, but you may hear more on this should it develop in the future. LME 3-month tin. The move down below the flatlining long moving average, currently at 39.105, on Monday 4 weeks ago, with bearish opening long black Mariposa, was the market finally making up its mind on what to do with the inverted cup with handle pattern. That's formed between March and early May. The final move down by the middle of May exceeded any targets on the downside as prices had pushed down through a fairly free zone from under the long moving average down to the two congestion areas below. The first, the smaller one, is between 33.665 to 33.475 and contains the April 2011 previous all-time high at 33.605. The second, larger congestion zone is between 31.845 and 32.985 and contains the 50% Fibonacci line of the March 20 to March 22 move at 31.845. The first zone slowed the drop whilst the second zone finally halted the fall. The drop fulfilled the downside target, unlabeled as it was so close, of the mid-April to May bearish halfway hesitation, and the inverted cup with handle for the March to start of May action. Thus all downside targets were filled by this market's drop. The subsequent reactionary rise through May and into June was muted, as though prices broke the March to date downtrend currently at 35,330. They failed to exploit the break, and last Friday we had the market revert back down with an immediate countering bearish opening long black Mariposa. This downtrend will now be reassigned after this commentary, as I wanted to leave you with an idea of what happened before changing it. Anyway, this past Monday we had a follow-on to Friday's action, and today even more so, as the prices broke down through the congestion zone between 31,845 and 32,985 and into some fairly free territory tomorrow, fairly free territory. Now above we have resistance at 31,255, a lesser Fibonacci resistance, and below we have support at 30,260, 29,755 and 29,005. So this action below the 31,845 to 32,985 congestion zone has opened up some possibilities. Firstly, I've drawn a rather acute bearish Andrews picture for the mid-April to early June action. It is very acute and likely unsustainable, but it gives an idea of what we may be looking on the downside. Right now we are between the middle time below, currently 29,920, and the upper time above, currently 35,945. It also opened the way, allowed me to pose the question, is this action since mid-April a possible bearish halfway hesitation? And the answer is maybe yes. If we do look at this as a possible bearish halfway hesitation, then a potential target X for this move could be as low as the $26,000 area. That's way down below, well, the bottom of my chart. This is a big move and something we should very much consider. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.